I've been using this secret trading strategy that I found a while back, and it's made me $70,000. You know how many Chipotle burritos that is? It's a lot. But the crazy thing is, I did all of this in the span of just 60 days. I know, pretty impressive, right? And after using it, I can safely say it's one of the best strategies I've found yet. So if you saw the title, saw the thumbnail, and you probably thought, what strategy is he talking about? It's this right here. I gotta explain it more, don't I? This strategy includes 5 steps in order for it to work. It involves the strategy itself, the entry, where to set your stop loss, and of course, where to set your pretty take profit so you can make all that money, baby. I'm gonna share with you these 5 steps and also go over a live trade example that I took earlier so you can follow along and use this strategy yourself. Sounds like a pretty good deal, right? Did I also mention I'm doing all of this for absolutely free? Yeah, I know, I'm pretty awesome. Let's dive straight into it. I'll be using TradingView for the charting platform for this example. If you don't yet have it, I'll leave a link in the description. Before we get into the secret steps, we have to make sure we're using the optimal time frame. Now, I like to day trade with this strategy, so I use the 5-minute time frame to start off. Once you have selected the correct time frame, we can now move to our secret steps. Step 1 is where the magic happens. Now, you're gonna mark the low and the high of the chart in order to mark our
liquidity zones.
I don't know why I made that sound so cool. They're just liquidity zones. Moving on. So make sure your liquidity zones are marked like this. It's not that hard. Once you have done that, we can move to step 2. Step 2 is to mark from 9:30 a.m., which is market open, to 11 a.m. Eastern Standard Time. This step is very important. If you don't listen to this step, a random goldfish somewhere will die immediately. I'm just kidding, the goldfish will be fine, but this step is very important for the success of the strategy. We are marking these time periods because this is the only time we can execute a trade. If a trade opportunity happens outside of this zone, we do not enter into that specific trade. We only enter if it happens in this key zone. So go to your chart and put 2 vertical lines so you know where you can start looking for a trade. Moving on to step number 3. Next, we want price to break one of these liquidity zones. It can happen in either direction. If it happens upwards, we will be looking for a short. If it happens downwards, we will be looking for a long. In this instance, the price went downwards and broke our lower liquidity zone, which is exactly what we are looking for. That's step 3 complete. Step 4 is one of the most crucial because it involves the entry, which is arguably the most important part. This step, if done incorrectly, will completely ruin the strategy. So we have to make sure we're doing it correct. This is how you do it. But first,
how would you like to double your money?
Yes, you heard him right. You can double your money.
How do I do that?
Well, there's a Forex broker out there that I personally use, and their name is Hankertrade. If you use the link in my description and it's your first time depositing, they will match whatever you first deposit. So say if you first deposit $69, they will match that and give you $69.
That's pretty cool.
If you need a new Forex broker and want that deposit bonus, use the link in my description. Alright, let's move back to step 4. So we have our liquidity zones, we have our time zone where the trade has to be executed, and finally we just got a liquidity break. Once this happens, we have to move to a smaller time frame, like the 1 minute, so we can get a sniper entry from this move. Go to the 1 minute time frame. Next, we need to mark the pivot point of where price needs to break in order for us to consider a reversal is happening. Our swing point on the chart is right here, which is the previous lower high. This is the point price needs to break in order for us to consider there's a market structure shift occurring. So for example, if price did this and doesn't break this point, we do not consider this a trade entry. We only consider an entry if price breaks this point just like this. So let's go back to the chart and see what price ends up doing. Price starts to move upwards and bang, it crosses our pivot point.
Rose trying to get open, fires away. Bang!
So we now know the chart has shifted structure and is starting to become more bullish. Also, keep in mind it's doing all of this in our time zone required. The last part of step 4 is that there needs to be a fair value gap on the chart. A fair value gap is simply a fast move created by a big candle, creating a gap between the 2 candles before and after. You can mark it by putting a level at the top of the first candle and a level at the bottom of the second candle. This will give you a gap area area where price has to come back to in order for us to enter the trade. So let's go back to our chart and mark the fair value gap that price needs to come back down to. We mark the candle before the big move and the candle after the big move. Remember, price needs to create a fair value gap for us to even consider this trade. If one is not created, we do not enter. It is now time for the part you've all been waiting for, the final step. Step 5. Our final step involves setting our entry, stop loss, and take profit. You're gonna set a limit order exactly in the center of the fair value gap. If you want to be safer and make sure you're always in the trade, you can set your entry at the top of the fair value gap. It's really up to you, but I like to place mine in the middle because price usually comes down here anyways, and I like to place mine here so I can get a better risk to reward ratio. For your stop loss, you're gonna set it right below the low of the fair value gap candle. Or if you want to be a tad bit safer, you can set it below the low of the entire move. But again, I place mine at the low of the candle so I get a better risk to reward ratio. It's all about that risk to reward, baby. Then finally, you're gonna set your take profit at the high that we marked at the very beginning of the video. So now we're all set up and we have everything laid out and we're ready to go. All you have to do is let price do its thing. Price comes back down to our limit order, so we now get entered into the trade automatically. Then it starts to consolidate a little bit and shoots right back up to our perfect take profit, and we get a glorious winning trade. I love this strategy. It's treated me really nicely, and overall it's a pretty easy strategy to follow. I'll be leaving the 5-step strategy checklist in my description. If you want to use it to follow along for your own personal trades, you can download it for absolutely free if you want to. Try out the strategy, share with me how it works for you on Instagram, and I'll see you guys next time.
Rose trying to get open, fires away.